Okay, since I just started the recording, let me do another quick recap of ES that I just talked through. I'll make it quick. We hit a big key level, we bounce, we're going up. Kind of chopped around yesterday between key levels, but overall still guiding up on a trend line. Facebook, good earnings. A lot of other names had good earnings. So we're gapping up on a lot of names, running into some squeeze tops in our next key level that we have rejected, starting to come back a little bit. If we can pop it open, we have these key levels of rejection that could send us back to test this trend line. We are currently on a path, so we could dip it open to retest 4205, filling the gap and testing this trend line at about the same time, looking for a bounce here to head back up to 4260. Should we lose this trend line, 4190, it could go fast down to 4136 for a retest. We do have squeeze bottoms and a daily Keltner right here at 4178. So let's see where we get the bounce. And these are the key levels above and below. We do have Apple and Amazon reporting after the bell today. So I wouldn't be surprised for them to send it down and chop around just to reload for the next big tech earnings that hopefully should go well. NQ today. Big old gap up with Facebook, starting to come back a little bit. Let's see if this 13,150 holds now that we're below 220. We'll most likely go to retest 150 during the cash session. As you can see, when Facebook reported, we gapped straight up above that 150 and held it, and then pushed off it. Now we're on a trajectory to get back to it. So should we continue to slip below 200, need 150 to hold, keep coming back up. Otherwise, we'll be going back to retest 13,100 and maybe even this daily Keltner down at the squeeze bottom. Ruddy back above 1900 is pretty key. It's just like on ES, where I had that very important zone that we bounced at in the sell-off this year. We've bounced at it multiple times. The Ruddy had a similar zone right at 1900 that we came back and bounced at even the last few days, but then we got below it and it was resistance. For upside, we need Ruddy to stay above 1900 and start to push off of it. So let's keep an eye on that today. We definitely don't want it to keep hovering around lows, as it could kind of hold back the other, just kind of show that we're being held back and chopping. So big key number on Ruddy, 1900. Let's stay above that. YM. Daily squeeze that we were near the bottom of, ran all the way to the top, then all the way back to the bottom. We're kind of just bouncing around it as it stair steps and starts to open up. It is still intact, meaning we haven't fired. And it gapped up with everything else, starting to come back. Just like ES, we have kind of a trend line from the lows. So looking for YM to also hold this trend line and not plunge back. If it does give up this trend line, it will go to refill the gap, test this daily squeeze one more time. But ultimately, Caterpillar just reported good earnings and kind of have a thesis for that to move up pretty strong today. So looking for YM to hold up this 400, or at the worst, this trend line. And then the Caterpillar lead YM right back up to a 2-hour squeeze top. But there you go. Targets above, targets below. Let's see if this trend line holds for YM. Apple. Since I started the recording, I explained it before the recording. What you'll notice, normally, I have these daily moving averages, and that's what we focus on. Most of you may not realize, but this handy dandy daily moving average tool that is part of the tool package that most of you have purchased is a very versatile tool. Every tool that I sell you is pretty versatile. If you go into that tool, you can change that time frame to other time frames. So what I've done is load the same daily moving average, another instance of it. I've set that to weekly, so now I can see the weekly moving averages. Apple did slip below the daily 200, but bounced at the weekly 50. And now, working our way back up, daily 8 and weekly 8, weekly 21, and weekly 8 are stacked together at 164. We have our weekly daily 50 at 155. 155 in itself is a huge key number if you go back on the daily for Apple. I talked about it a little bit yesterday, but if you weren't around, I was checking in on some folks that do the same thing I do on YouTube, on Twitter. Yesterday they were saying, pre-market, they were saying Apple will lose the 200 and go straight to 150. And I just couldn't understand how they did not see the importance of 155. And especially with the weekly 50 sitting there, it's going to be really hard to just shoot to 150. Ultimately, 155 needs to hold on Apple. We're starting to push up. We're at the top of a squeeze. So wouldn't be surprised for a little profit taking. Would like to see 157.5 hold and for it to just keep pushing back up to the weekly means at 164. Apple does report, so wouldn't be surprised for it to come back and just settle and chop around 157.5 until earnings comes out after the bell. AMD. Chips wear it down hard, hit third ATR, and now starting to work their way back, right? Let's see, AMD does report next week, and I think NVIDIA does end of month, maybe. We'll see when we get there. So chips can continue to potentially get some love. They are guiding up with the market. AMD, not a huge focus for me. I don't like AMD when it's under 100. This is going to be a struggle to get back. Ultimately, let's see if it can hold 86, start to work its way back to 88, 89 at the top of the squeeze. Losing 86, coming back to retest 84. Amazon. Amazon. So I've talked about this huge shaded area. It is all a huge gap fill from previous earnings. And so, whilst your mic's not muted, just so you know. There we go. So Amazon has officially gone all the way and filled the gap. I wouldn't be surprised to see it settle in this squeeze today until earnings come out. This will be the last earnings before the split. I do kind of expect Amazon will beat this earnings, or at the very least, they're going to have guidance going up because of their recent release of like that Pay with Prime or something that is supposed to compete with Shopify. It's one reason Shopify has been sold off so hard. Amazon now has this new component that allows them to be competitive on what Shopify was beating them on. So, should see some upward guidance, and hopefully should beat on earnings for Amazon. Last earnings before stock split, we could see an epic run up into that stock split we know how they love to run things up. Amazon could be the one to save this market and get it back above the daily means and pushing. As it filled the gap, basically hit third Keltner. I just love it when things line up. Sometimes it can be that fucking simple. So let's get through this earnings and we can start to play an epic run up into that stock split. I can't imagine we sell further into that stock split. So, BA, not interested. CAT. This setup is very interesting. CAT recently fired squeezes to the upside, fired daily squeeze, went on an epic run from 220 to 240. A few folks in here raked it in on that. Market brought it back to and through the daily means. Where's my daily 50 right about here at 212. We slipped a little below that to hit the daily 200 at 207. Now, pre-market, we gapped up with the market. We hit the daily means. We fall back, we hit the daily 200. We're sitting at the weekly 50, and Caterpillar beat on earnings. Now, good question would be, why aren't they racing up? They beat on earnings, why aren't they taking off? Well, sometimes big money likes to just wait for open because all the premium that gets pumped into these options normally on a Thursday or a Wednesday, Caterpillar does not cost this much for close to the money. There's a lot of extra premium pumped in here, right? And we know why. Because it's earnings, because it's a volatile market, they're going to pump extra premium in for earnings. Well, at open, they strip all that extra premium right out. And what we have found, especially when we're kind of flat or a small gap on earnings, them taking out the premium can mean these 215s, which closed around 430, landing right at 80 cents, right at beast, especially with a gap down. And it's not even that big of a gap down, but when they suck all that premium out. So, showing this now during prep, here are some numbers, beast numbers for CAT this week, next week. This is a great setup to run up, a beat on earnings and everything. Now, should we go below 207, 206, they're just being kind of dicks and selling it off and trapping people just so they can run it up next week. So still keep an eye on next week's. But we've had a number of earnings plays with Beast where it's a small gap because of what the market's doing. They beat and they don't take off yet. Get ready at open. Get those strikes loaded up with the Beast numbers and be ready. Personally, I'm probably going to pick up a 215, 212 and a half at open, at least one contract. Then I'll watch and start to manage. Wouldn't be surprised if we do come back to retest this daily 200, just so they can really load the boat. But by all intents and purposes, this has come down, almost tapped daily, second Keltner, tapped daily 200, and POC is up at 232, way up here, meaning the point of control, a lot of volume was exchanged on this breakout. Came back with the market on low volume. There's a great setup here, folks, so get ready. Facebook, big old gap up on earnings. I'm not going to touch this one today. I'm going to keep an eye on it because I don't want to see it fall back too much to fill a gap, right? Wouldn't be surprised if it slips to 190 just to hit daily 8, or this 194 to hit daily Keltner just to come right back up and chill at liquidity. Wouldn't be surprised to see it just pop right up and hang out at liquidity and go sideways. Google. Down on earnings. Probably not going to touch this one. Going to let the other big tech names report. They will drag up the market, and Google, even on bad earnings, Google loves to lead tech. Google is still an amazing company. They're going to be fine. So for me right now, it's no touch, but maybe once all big tech has reported, it can be played. GS. Banks led after their earnings. Ran into daily squeeze top, and with the market came back, now we're at daily squeeze bottom. So they could be setting up for another run up. And, after big tech, we'll see. They could just run up with the market, right? But it seems like right now they're kind of stuck and wedging. So you've got your squeeze bottoms and tops to play off of. If it hits top, play it back. Hits bottom, play it up until it breaks out, right? Back and forth. Probably going to be the same with JP Morgan. Yep, pretty much the same. GS did beat on earnings, JP did not, so GS is the better play if you want to play finance. Not an interest for me. Microsoft had good earnings, up, stayed up, still up. Definitely don't want to see it go back below the squeeze that has formed around 280, right? So let's just see what Microsoft does, but overall it's up and heading back up. It kind of already got its butt beat. So it should keep on trucking, and POX at 280 as well. So wouldn't be surprised if we do chop around or have some profit taking in gap filling. If we had a pullback on Microsoft to squeeze bottom and POC before the rest of tech reports, so they can load a little bit more and ride up. Netflix, like I've said, down on earnings, don't touch. It's way outside third Keltner. Can you keep shorting? Yes, but is it going to be I don't know. There's a trade there. There definitely is. But for me, I don't need to keep beating up something that's beat up. At some point, it is going to snap back. NVIDIA. Oh, man, we went down and hit third Keltner Tuesday. Now we're starting to work our way back up. And we're poised for a pretty good breakout here. I feel like, does LRCX report this week? I think that there's some chip that does report this week, and I think it might be LRCX. They might be kind of just coiling and setting up, waiting for that LRCX to report. I'll add it to the list for a second. Okay, no, they already reported. It was some other chip name this week I thought was reporting. But either way, NVIDIA, we've got POC way up at 220 with the daily moving average. Once the squeeze starts to fire, we've got, 1 hour there. But we do have a 2 hour and a 4 hour that are just starting, and they'll probably be up at 200 and above. So, Vidi, once this squeeze starts to fire to the upside, going to be a nice run up. And who knows, maybe they're just waiting on big tech too. So, not a bad setup here. Want to see it get above this 192, start to fire, get above this 194 where the second Keltner is to start the journey up. Definitely going to be watching the 200s, 195s. Qs, steady trend up. Not loving that wick. We've seen these wicks and how it can be a precursor to go back and retest. So draw your trend line. Want to stay above it. Want to stay above this 318 and the squeeze bottom. See if we get a bounce at 320. Get back to 326. Roku, yuck. 84 bucks. Oh my God. Poor Kathy. She living in a box yet. No interest, not touching it. Shop, pretty much the same. No interest, not touching it. Snow. I don't know if anyone in here is even interested in ever trading snow. Maybe there's not a point in covering it. I don't ever see anybody say they're hitting it. Not a bad setup, Foreman. I said earlier in the week for Monday prep, it looked like it could be poised for a breakout. It got a breakout, but market's been messing around. It's been chilling, going sideways. Kind of poised for another breakout. Squeeze is setting in. POC up at 187. Daily mean up at 200. Could get an acceleration through these squeeze tops. Snow could be a good setup into the end of the week. They don't have earnings till the end of May. SPX. Man, we had some fun on SPX yesterday. Let this pop happen. Shorted it back. Caught a little bit of long side. Caught some shorts back. Caught that epic short in today. Gonna be gapping up. We'll see where we land. But here are the key levels I'll be watching. Should we start should we gap above those? And no, actually we're gonna be open right around them. Basically, 35 has to hold. It needs to become support and move off of it, or we're gonna keep going back down to retest this annoying zone that we have been at for days. Then we can get back up to 4260. We have a Keltner and the daily 8 right here at 4300, which was the ATR for ES. So upside target today, definitely. SPY. Moving up. Got one of those annoying wicks. We're right back down to our key zone. All right. So let's see. Could be a fade to 19.5. Close enough to filling the gap. And then truck back higher to the squeeze top. Watch that trend line. Should 19.5 give out. Going to retest this 18 zone. Oh, I hope that doesn't give out, because then we'll be going to test this squeeze bottom and the lows, and ES will be going to test that 4140 zone. So, square. Come on, square. Today. Holding that second Keltner. And just chopping around it. So, let's see if we fade back. Tap it again, tap these squeeze bottoms and 100 now that we've gapped above it. And start making that journey to the squeeze top, 105. POC still way up at 125. Sheesh, that's from last week. Yeah, we hit this last week where it ran up to the daily mean and 125. So that's where POC was established, and we've faded away. Nice to know it's still up there, so let's see if we can fire these squeezes to the upside, get through the daily 8, get back to the weekly 8, which is right near the daily mean, kind of straddling 115. Tesla. Big old drop, fading up. Key level, 920. Hit it once, hit it twice. That's what's holding us down right now. Looks like we're on a journey back to test 879. Should that give out? I could be going to test 860. If we can get through 920, we have the daily 50 and the weekly mean together at 938, 940. That's the big target. Let's check in on VIX. We'll wrap up this recording and we'll start getting into trading. VIX with the gap down fell to our 28, 7, 9, 20, and our little zone around 29. Now it's starting to get back above 30 on this pullback. We closed around 31 and a half. We have this trend line from the highs yesterday, so let's see if VIX tops out around 31. Ultimately, we need to see it back under 30 for any upside, but we have squeezes on a lot of things today. We have squeeze on VIX today, and we kind of have our range set. So see if we can get below 30 and this zone around 29. Or if we get back up, fill the gap, and start testing 32, 33. That's the range for today on VIX. Hope this was helpful. Ending the recording now. See you guys in there.